Hey guys, Brian Stevens here with the National Real Estate Post. Dave Stevens, the past president of the Mortgage Bankers Association and the FHA, recently wrote an article why HUD should lower the mortgage insurance premiums on FHA deals to create some level of affordability once again. The reason for doing this is quite simple. It can happen fairly quickly and does not need congressional approval. We had an opportunity to have this conversation about affordability in housing right now, and how do we address some of these complicated issues where there doesn't seem to be any answers in the foreseeable future. So join me and listen to what Dave Stevens has to say, one of the most influential people in the mortgage and lending space over the past 4 decades. Find out what he has to say about some of these complicated issues, these challenges that face us right now. We do have a call to action on this, and it's going to be to contact your congresspeople. That information is located right here on this page. Imagine if everybody in real estate and lending actually contacted their congresspeople and we made a difference. Wouldn't that be something? So from 2006 to 2012, and it's worth pointing out that you were running FHA starting in 2009, but we saw the Mutual Mortgage Insurance Fund go in 2006 from 6.82%, which was way more than we needed, and it dropped all the way down to negative 1.44%. Now, in your article, you said, well, in 2016, we went from 2.35%. Now we're sitting at 8.03%. Could not the same thing happen today that happened between 2006 and 12, where we had a massive surplus and we went into a negative? And again, we have a massive surplus again. Why should the FHA, why should HUD right now take your advice and actually lower that premium?
Yeah, I mean, the answer is pretty simple. This is not the time we're in right now. Even if the economy moves in recession, it isn't the Great Recession. I mean, keep in mind the 2008 recession was the worst recession since the Great Depression. Home values dropped 20% from peak to trough in a very short period of time. And that was brought on by a whole bunch of unsustainable loan programs that were, frankly, sold to a lot of folks who shouldn't have had them. I mean, you remember The Big Short and interviewing dancers who owned, 15 or 20 properties, all on negam, pay option arms. I mean, that was an extreme scenario, but I'm sure those kinds of things existed. All of that was outlawed through Dodd-Frank. The kind of programs we offer today are entirely different. You have to prove your ability to repay. Negams are no longer allowed, extended term loans, all of those things that are barred by the Dodd-Frank legislation. So not only do we have a safer lending environment, the other thing we have going our way is simply the fact that demographics are much more in our favor. So, one of the reasons why we're still seeing lines in front of open houses, despite 5% or near 5% interest rates, is because demand is huge. And the peak buying years of the millennials, the biggest cohorts to buy homes of the population, are hitting their early 30s right now. And it's just going to be a significant demand on units. So even if it cools, we're not going to see anything like that previous recession. The other element I would just add on, Brian, is what really killed the FHA NMI fund certainly was the Great Recession, but piled onto it was seller-funded down payment assistance programs, which had a default rate of 34-ish%. And those homes were all well underwater in really hard markets. And it was the cumulative losses to FHA was insurmountable ultimately, in terms of the FHA ultimately needing a $1.7 billion draw from Treasury in its worst period during that time frame. This is an entirely different scenario. And on top of it, the financial resources of FHA are massively larger than they were going in to that period.
Why is that?
Well, 8% versus 6, right? I
Okay.
mean, and on top of it, it's a larger balance sheet. So in just terms of sheer billions of dollars, it's tens of billions of dollars larger than it was back then. We saw it coming back in 2009. In fact, when I testified in front of the Senate to be confirmed for the FHA commissioner, I said that I was worried that the fund was going to go negative, that the fund was in jeopardy in my testimony, because we could all see what happened. Now we have FICO floors, we have a better quality book. Home prices are not going to do anything like what happened in 08 with those 20-ish%, 24% actually from peak to trough value declines. We have the qualified mortgage rule, and we have much better demographics. So yes, the economy may slow. Absolutely, the housing market's going to slow. It needs to off of the last 2 years ridiculous growth levels. But FHA is overly flush with capital, far more than they've ever had, at capital ratios they've never seen, in a very different market than any recession we've ever been through.
It's really interesting if we just look at the MMI fund, you can see when a lot of these deals were maturing, where you see these real precipitous drop-offs. Not the 0.5%, but between 8 and 9. I mean, it went from 3% to basically a 0.5% drop in 2.5. My question is this, though. My next question is that going to be enough? Because we heard Secretary Fudge, she testified that, and I believe this was from what you wrote. FHA endorsements for mortgages made to Black and Hispanic borrowers are more than twice that of the rest of the market. That's something I want to address. According to calendar year 2020 Home Mortgage Disclosure Act data, which only emphasizes the importance of this program to entry-level, first-time, and minority home buyers. And Market Watch reported that in the second quarter of 2019, the Black home ownership rate dropped to 40.6%, down 7 percentage points from roughly a decade ago. So isn't the real problem that we don't have entry-level homes, that we don't have anything that's really affordable in any market? I mean, we're talking about a show right now that we want to go to, but nobody can afford the price of the ticket. Whenever I go into a community for any type of event, I always see what the cost of a civil servant, or how a civil servant stacks up to buying a house, an average house in that community. And I've just seen that affordability disappear. So yes, dropping MI would be good, but does that really cure the problem, and especially for underserved communities?
Yeah, so no one thing is going to cure the problem, but that doesn't give an excuse to be charging these minority borrowers, who the secretary made a point of trumpeting in her testimony. Right. And what you quoted there is directly from my op-ed piece that I got published this week. Because FHA is so uniquely concentrated with first-time home buyers. In fact, almost 85% of all purchase transactions are to first-time home buyers. And because the numbers of African-American borrowers and Latinos is massively larger and dwarfs any of the other sources of capital like Fannie Mae or Freddie Mac or private sources, overcharging in the program unnecessarily can only be, my conclusion is, you're ultimately overcharging African Americans, Hispanics, and first-time homebuyers. Will charging them less all of a sudden open up the floodgates? No, it won't. We have other issues at play. We have lack of down payment, which is often a challenge for first-time homebuyers. We have a lack of affordable inventory, particularly in sort of the coastal markets. But with remote working, there's opportunity to work in other locations for some. But none of that means that, would support any kind of argument, say, well, we don't need to lower rates because there aren't enough homes for these people anyway. It almost sounds to me as discriminatory if anybody was to try to make that comment. It sounds like an excuse that would have been used in the 1950s or 60s to stop giving access to home ownership to certain classes of Americans. So, the reality is, I applaud a lot of what Secretary Fudge has said and testifies about in her efforts to stop discrimination. And they talk about having more affordable housing units. The president's plan that just rolled out this just a few days ago includes monies to help build new affordable housing units. All that stuff has to happen. Even if it gets passed and funded, it will take time to ultimately create units. In the short run, the easiest thing to do is to stop overcharging the borrowers in the FHA program, who are exactly the constituency that the secretary and the leadership at HUD talks about and should care about the most. And they can do that with a mortgagee letter. It doesn't require any process other than simply an ML to lower the premium.
I'd like to read you this quote. This is one that kind of left me scratching my head. If their values are aligned with the words that they're saying, because this is verbatim what came out of Marcia Fudge's mouth. She said, the strength of the fund is a promising sign and solidifies the important role FHA fulfills in making home ownership a reality for first-time home buyers and for those with lower incomes. We all agree with that. The next thing she said is, this year our administration took unprecedented steps to deliver relief to those devastated by the pandemic. So this came in the context of talking about the MMI fund. And I'm asking myself, are they using part of that MMI fund for things outside of insuring FHA loans? And if that is the case, is that a misallocation of those funds? And is that the reason? I mean, are we financing things outside of insuring FHA loans? Why would she have that in there? That doesn't make a whole bunch of sense to me.
Well, I think she was giving a nod also to the administration's efforts and with forbearance and all the other things that were implemented during the pandemic. But I also do appreciate, the concern, Brian, because when I was the commissioner, when there was a period when we were producing excess profits, let's just call it, to the government from the fund, especially once we started raising premiums, I knew that the appropriators could then use that money to go invest in other federal programs. And frankly, I know there were conversations that took place at a senior level, let's say a cabinet level, that said, if we raise premiums X, it'll generate, $8.6 billion more that can help pay for that road program or something of that sort. And it isn't lost on members of Congress or leaders in the administration that this massive profit, they call it negative subsidy, by the way, is the technical term in government speak, but this profit, which creates a negative subsidy back into the coffers of the government, can be reallocated. And I worry that is motivating to policymakers, even perhaps in the White House, who would just as soon let these borrowers in the FHA program, again, where roughly 60% of Hispanics get their mortgage from, right, and about the same for African Americans, that these policymakers would let these borrowers get overcharged because they need that money for some other program. And FHA wasn't designed to be a profit center. It wasn't designed to be a financing tool for other programs. So the FHA program was created in 1934 during the Great Depression to bring liquidity with the support of the government, which would theoretically make it less expensive than other sources, to people who needed it across the country. And it's done that for decades. I worry right now why we haven't made the move. The entire premium structure that I had a major role in putting in place, including a piece of legislation that allowed me to raise the annual premium higher than the previous cap. I got the cap increased. We ended up rising premiums above that because we had to shore up the fund.
Sure.
The fund is not only shored up, it's oversupplied. It's in excess of anything that's needed for responsible reserves. And again, if there is any unstated, no one would ever admit this in public, but if there's an unstated desire to have access to more capital coming off of HUD for other programs, I would just say shame on you. Okay. For a secretary who speaks passionately about trying to help urban communities and help minority home buyers, and who herself comes from an urban market in Ohio and knows what these communities need and the people who want to buy homes there, there's literally no excuse. I mean, I actually think you've read my article that I wrote, or my op-ed piece.
Yeah.
I pulled out all the data points, and I think the whole case is made there. And I've been waiting for someone to give me a counter argument, and there isn't one. There isn't any argument to say, oh, let's hold these guys back. In fact, a realtor or a broker, I think someone commented on one of my social media posts where I posted the article, don't we have too many buyers wanting to buy homes right now? Maybe we should slow that up. And I was like, I could declare that a racist comment, but I'm not. Okay. Yeah. Let's make it harder for those in the FHA program to get a home, because there's just too many of these buyers anyway. So those people should wait until the rest of us get our homes. I just don't understand any of this logic. And I think, as I said in the article, the HUD has said a lot, but actions speak louder than words. And unless there's pressure, I thank Scott Olson from 𝐶HLA from raising it again in the letter that they published this week. It's what prompted me to write that story. I referenced it in the opening paragraph. But we need uniform across the board. I mean, there is absolutely no rationale, especially with rates hitting near 5%, having gone up close to 200 basis points at this point from the lows, and 120 basis points just since since December. This is really hard on people's budgets and their pocketbooks, and they're not going to be able to erase that, but they can certainly make it easier. And can I add one more point, Brian?
Please do.
Don't think that the GSEs and the mortgage insurance companies that have MI on GSE loans don't view this as a competitive market with FHA. I can assure you, if FHA lowers premium, MI stocks could be impacted because they worry about being competitive. And so they will compete. And so whether you call it a rising boat, a rising tide raises all boats, I guess the lowering tide in this case, if we're going to lower rates, would lower all boats across the food chain, I think, and ultimately would impact GSE loans as well. And look, any incremental improvement, an eighth, a quarter, I mean, that's a big deal right now, as you well know, and as anybody who's in the mortgage business knows, it's a really big deal. And it could be motivating if that were to happen, to suddenly have a whole bunch of folks go, hey, I want to go buy now, if this kind of move happened. So.
Yeah, inflation, interest rates, rents, it doesn't hurt you. It's not going to hurt me. I mean, honestly, it's going to hurt the people who can least afford it. And that's the only people who it's going to hurt. So these are wildly important points. I just read something the other day. They said in 2018, we had a 2.5 million unit deficiency in terms of housing that we needed. Today, we have a 3.8 million deficiency in houses. And in another article, it said in the 1970s, in any given year, we were building 470,000 entry-level homes. In any given year, entry-level, which would be affordable homes that people could buy. Those are gone. They said right now, the housing, new home builders in any given year are only building 40 to 60,000 what would be deemed entry-level homes. Do we not need to hold the new home builders more accountable for what they're building? I mean, I get why they're doing it, because the demand is there and they're going to fill those houses, and why not build a big house? If you can sell that, it's going to give you more profits than a small one. Do we need some type of legislation to bring back affordable housing for both purchasing purposes and renting?
Yeah, I think we do. And I think holding home builders accountable isn't fair. Okay. These are for-profit companies. They've had really tough years themselves. They can't do it on their own. They can certainly build more homes. But when you have so many zoning restrictions and environmental requirements and more, not that any of them were put in place for bad reasons, the cumulative effect reduces the marginal profits on an entry-level home, really forcing institutions in home building to try to capture, the move-up market if they can, if there's enough demand for it. But we have a trifecta on demand right now, right? We have millennials, the biggest generation in history, and the biggest cohorts of the millennial generation rolling into their peak home buying years. And if you think the last 2 years had huge demand, the next several years are only going to be greater.
Right.
We have rents that have gone up 17% year over year. It was just a recent data point published this week. And so rental is a really uncomfortable place to be. People have to live somewhere. But on top of it, we've had, at least for the last year, we've had investors buying up about a quarter of all new inventory hitting the market on resale. And then the baby boom generation, which is the second biggest pool of buyers in the market, are downsizing. They want to sell their McMansions and they want to move down in the homes. Many entry-level buyers or move-up buyers into their second home, which is not quite a McMansion buyer, would be. So we've got a super squeeze going on at that end of the spectrum. And I think we can't wave a magic wand. We all live in a pragmatic world. Getting Congress to, agree that the sky is blue might be a difficult vote. Right. And so the challenge for me and what frustrates me is these are all macro issues which need to be addressed. I was surprised that the Build Back Better bill got stopped. And more importantly, I think the housing pieces of the Build Back Better bill likely were going to be left on the cutting room floor on anything that has a chance of going forward, just because they got to cut dollars out. Otherwise, Joe Manchin won't go forward with it. And so, no one's putting housing as a priority other than in lip service terms. Again, I hear Secretary Fudge talking about housing as a concern. I don't think I've heard the president speak about it, except when he was running for office and he had it in his initial platform. We haven't heard much out of the White House around this housing challenge. And so that's why I think today, African-American home ownership rates, per that Market Watch story, are about where they were in the 1960s. Everybody talks a good game here, but nobody does what's needed. The FHA fund is far from in trouble and far from ever theoretically being in trouble if you run any macro simulation on what could happen to that fund. It has excess capital. Premiums were priced for a different era to get us out of the Great Recession, to deal with all the defaults on the seller-funded down payment and a 24% average home price decline across the country, where cities like Detroit were almost wiped out for a period of time. Yeah. And so that's a once in a generation, almost once in a lifetime kind of recession, hopefully. And we're certainly not going to see that today because the demographics are better, loan quality is better, the demand is just in a very different point of the cycle, and the economy's core is very strong, which is causing all this inflation and driving rates up. And so, we should continue fighting for all those things we talk about. We need more units. We need to make the process of building entry-level housing less onerous, perhaps, and think about what can be relieved from home builders, or what incentives can be applied to home builders so that they always build a percentage of their new construction in entry-level homes. Those are long-term solutions. There's just one easy short-term solution, which every loan officer in America should be calling their member of Congress. Exactly. Right now, after watching this, if they see it, they should be calling their member of Congress, pick up the phone and say, FHA needs to lower the mortgage insurance premiums. This is crushing first-time home buyers, and especially African-American home buyers and Hispanic home buyers. They need to do it now. And I think it's a great argument that could be made for Republican members of Congress, particularly because they most likely look for ways to find fault in what a Democratic regime is doing. And so that's a great reason for them to call Secretary Fudge. And I think it's great for African-American members of Congress and the Congressional Black Caucus to call the Secretary, because in many cases it's their constituencies that are being affected, and other Democrats to make these calls. So, this is something that's pretty damn simple to me. And we all get wrapped up into sort of ridiculous arguments like the one I saw on my social media page, which is, we got too many buyers. And I bit my tongue in my response, and I don't think I actually responded, but this is just the nature of the beast.
I do have this one final question, kind of a two-part question. You said, okay, this is kind of the low-hanging fruit. This could be done. It could be done easily. It could be done almost immediately. So let's take advantage of lowering our MI right now. What would you recommend lowering it by? And two, are there any other areas of low-hanging fruit that we might possibly be able to do to bring some level of affordability back that you see on the horizons?
Yeah, so on the MIP, I don't want to be prescriptive. And okay. When I dealt with the MIP and was responsible for it, I had a team that would run analytics and show me what it meant to the fund and overall returns and how it might affect the go forward. But keep in mind, if you lower the upfront MIP, it doesn't cost much, but it also doesn't do much for getting new borrowers in, because they don't qualify on the upfront. It's financed in. It's usually a few bucks extra in your mortgage by the time you finance it. It's a one-time fee. Changing the life of loan premium, I hate to say it, guys, won't do much for qualifying. You have to qualify based on your payment, and whether that payment is life of loan or ends in a few years or 5 years or 10 years, you're still gonna have to qualify at the higher payment. So I don't wanna mess with life alone, because there's other reasons to keep that in play. And I know that you can't ask for everything, right? So the one that I think would have the simple and biggest impact to qualification to a borrower's monthly mortgage payment would be the annual MIP. And I originally thought would have done 25 basis points already. But I think you could easily do 50 basis points, although I'd want to see the analytics on that. But I think you could easily do 50 basis points when I look back at the increases we put in place post-2000, starting in 2009. And you enrolled some of that back. We've increased mortgage insurance premiums significantly over that period of time. So I would look for something in the range of 50 basis points or 3/8 perhaps. So a lot of people are going to fight against this, right? I mean, the mortgage insurance companies won't like it. Their lobbyists are going to work the hallways arguing against an MIP reduction. Ginnie Mae security holders won't like it because it could impact prepayment speeds and modeling that they had. There's an easy argument to that. But anyway, they didn't. They also, when they booked those loans, they didn't expect rates to rise 100 basis points, whatever they are. So their duration models are blown anyway. But nevertheless, I would look for something in the 50 basis point range. And if that could make sense financially for the fund, think of what a half a point right now in yield would do to motivating a lot of activity in the marketplace. And look at what would happen from Freddie and Fannie lenders dealing with Freddie Mac, Fannie Mae, and the mortgage insurance companies that support them, how they would have to move to compete with that action. So I just think this is an absolute no-brainer. Other things, we need to promote down payment assistance programs. The single biggest barrier to entry for a first-time home buyer is lack of down payment. In a Urban Institute study, you can look it up on their website. It's fresh in their research area in the real estate section. And down payment's a problem. They don't have, oftentimes first-time home buyers today don't have wealthy moms and dads who can give them a big down payment, particularly non-white first-time home buyers. And so down payment assistance needs to be broadened, not scrutinized right now. And there's a lot of scrutiny going on DPA. And I think there's some rulemaking in process at HUD that would actually go the other way and constrain DPA. And that just makes no sense to me. I think there's other ways to look at credit scoring that has yet to be done, despite a lot of talking about looking at FICO and alternatives. There's a variety of things in qualification itself. Now, you and I come from a day when we had more adjustable rate mortgage lending, which is much more difficult. But honestly, in a market like this, a market for ARMs would be a plus. A more simplified buy down option. That was more affordable and could be financed perhaps by the seller on the buy down portion would be an option. But we need to be thinking it creatively about how to build the market. On the one hand, there's a supply, and we all complain about that, and it's a real deal. That will slowly alleviate itself here, especially with rates rising,
right?
And new construction and more boomers putting their homes on the market because they've been sort of off the market for 2 years for the most part because of COVID. That part will slowly alleviate, not completely, but slowly. But on the programmatic side, there are things that can be done simply by someone being bold in housing policy. And we have nothing bold happening in housing policy other than, we have teams working on appraisal discrimination. That's great. That's fine. Let that process go forward and see what we do there. And we have teams working on anti-discrimination with an MOU between Sandra Thompson at FHFA, Secretary Fudge at HUD. That's great. Let's worry about anti-discrimination. But all of us in the business know it ultimately comes down to, can I qualify for a home? And is there one on the market I can buy? That's all this comes down to. And on the qualification for the home, we could deal with that with pricing and product. And that's really what matters at this point. And again, read my story in Housing Wire. If you throw a link to it, Brian, that would be awesome. But the argument's there. I mean, it's right in front of you. Get your state association to make it a policy priority. Write your own letter to the editor in your state newspaper. Call your member of Congress. A single spark here can light a prairie fire, and we need a prairie fire to get people hopping.
Yeah, I've always said, I don't care who's playing if I can't buy the ticket. And right now there's a lot of folks out there who can't buy the ticket. And so they're not even considering it. And that whole feeling of being destitute and not being able to achieve a certain level of what I believe to be the American dream is it's demoralizing. And right now we're at a place right now where people are feeling overwhelmed by rent. They can't buy a house. And we need to start looking at solutions here. Dave, I just appreciate you doing this. Yes, and of course, there's going to be a link to the article. We're also going to link everybody to their congresspeople and their senators. We'll put a boilerplate letter on there. It's better if you guys write it yourself, but there's no reason why we shouldn't, as an industry, be trying to take a little bit more ownership of things that we see happening every day when we go to work. Dave, thanks again so much, and I hope to talk to you soon.
Likewise, Brian.
Thanks.